But no, I actually think it's the opposite. I think the more that we can embed these experiences, customers will actually become agnostic to who their financial service provider is. I think the reality is that increasingly customers have an affinity and an engagement with a brand, with an experience, with a service, and actually they don't really care who's providing that financial service. So I think it'll go the other way.
This is Converge, a podcast from Convera. Come with us as we shape the future of finance.
Welcome back. Today, we're speaking to Jeff Parker, who is the CEO of Paymentology. We're at Money 2020 in EU. Paymentology is a global card issuer and payment processor, one of the most notable ones out there. So welcome, Jeff. Thanks for joining us. I know that you recently joined Paymentology as CEO. Can you give us a little color of your background and your path to where you are today?
Sure. Firstly, thanks very much for having me today. Pleasure to be here. I probably took a long and diluted route to where I am. I'm from the UK, but I've spent about 20 years living and working overseas, initially in the US, before spending about 12 years in Australia, Sydney, and 4 years in Hong Kong, initially in kind of investment banking. And I moved into Fintech. In about 2013, I was the chief operating officer for an international payments business called OFX. We grew that and listed that in Australia before joining a business called World First, which was another international payments business. They were the first company to really provide virtual IBANs to small merchants, and we opened up the ability for Chinese merchants to sell in the US by giving them US dollar bank accounts. So that was kind of quite cool. And we grew that business and we sold that to the Ant Group, the owners of Alipay. And then I started the move into cards. So about 18 months ago, I joined Marqeta, another issuer processor running their business outside of the US, and I joined Paymentology just before Christmas. So I'm kind of coming up to my half-year anniversary.
Nice, congrats, that's great. So when you joined Paymentology late last year, you said that despite having worked in FX and international payments, it was only in 2022 that you had your eyes open to the innovations possible in the issuer processing and card payment side of the industry. So what excites you the most about it? What drove you to it? And what kind of business models do you think it's going to facilitate?
Yeah, it's very true. I think I'd been in the account-to-account kind of international payment space for so long. I'd kind of been indoctrinated that cards were a dying product. Mm-hmm. But actually, since coming in, I've been amazed at the level of innovation that exists. I think if you look at some of the key trends in the industry, the move to digitalization, mobile wallets, contactless payments, actually, if you kind of unpeel or get underneath the surface, most of those actually are powered by cards. And so I think it's really cards that are allowing the significantly increased kind of seamlessness and frictionless experiences. And it's really one of the key drivers behind embedded finance. And so really for me, cards is really powering a whole wave of both enhanced customer experiences, but also loyalty and rewards and engagement opportunity for brands and businesses out there. So super excited about what the opportunity looks like.
Yeah, no, very cool. Do you have any, when we talk about embedded payments, do you have any concerns as we move forward towards embedded payments being more ubiquitous into all sorts of customer experiences and workflows, that it would start to become a somewhat fragmented experience for consumers? Do they really want to have, financial relationships with that many multiple providers rather than one or two banks, which has been, the way to do things up until now? How do you think that'll transpire for the customer experience?
Yeah, it's a great question. And I think ultimately the success or failure of embedded finance and becoming ubiquitous, as you said, is around making that customer experience seamless. So I think as soon as we introduce too much friction or friction for customers, then they won't adopt it. And so I think ultimately that's what will drive it. But no, I actually think it's the opposite. I think the more that we can embed these experiences, customers will actually become agnostic to who their financial service provider is. I think the reality is that increasingly customers have an affinity and an engagement with a brand, with an experience, with a service. And actually, they don't really care who's providing that financial service. So I think it'll go the other way, actually.
So they don't care if it's a brand or a bank, as long as they're getting what they want in terms of the experience.
I think so. I don't know about you personally, but
no, me personally,
but I prefer the brand.
100%. Yeah, it's usually easier. So it's been a tough couple of years for fintech in terms of valuations and the enthusiasm from VCs dropping and a slowdown in the market. Has that impacted, or how has that impacted Paymentology?
I think we're. So I agree with you. I think it's been a challenging 2 years for the industry as a whole. But I think what it has done, and we're starting to see that even at this year's event at Money 2020, is I think there's been a flight to quality. And I think because there's been more of a focus on businesses reaching profitability, there's more focus for investors on how capital is being allocated and deployed. I think it's making sure that businesses are proving that they have sustainable business models and that they can succeed in this environment. And we're starting to see at the top end of town some significant profits being generated by fintechs such as Monzo and Revolut, etc. I think for Paymentology, we've been fortunate. We're owned 100% by Taya, and Taya did a relatively large fundraise back in 2021, and so we're relatively stable from a financial position, and from Paymentology, we're looking to break even by the end of this year. So we've been relatively insulated from it, but like everyone else, I think it's focused us to be much more diligent in terms of how we think about our strategy and how we think about growth going forward. So in hindsight, it's actually probably not been a bad thing for us and many others, I think.
Mm-hmm. Yeah, and I'm curious about the origin of Paymentology goes back over 20 years. Apparently, you began the company in South Africa, I think it's Tutuka, and you still have a big business presence there. So how has the heritage from South Africa influenced your development over time? Do you still have an outsider challenger mentality that you're expanding so globally now?
Yeah, it's super interesting. I think for those who don't know, the heritage is really 4 or 5 businesses that have been bought together of relative size. So Tutuka was one of the largest components of what is now Paymentology, but there's also the Paymentology initial business itself. There is Mia Wallet, which is a tokenization business. We had a small acquisition of a credit business called Box, and we acquired the issuing business of Borgen in Iceland. And so the combination of those is now Paymentology. And I think that's created this amazing kind of global footprint. We have clients in 60 countries now. And I think we're by far the most kind of global of what we call modern issuer processors. But I think the heritage is extremely important for us as a business. I think we very much built into the DNA of the business. In the early days, I think that's due to the kind of the heritage of South Africa, that as a business, we wanted to change lives, and we wanted to change lives not only for our employees, but we wanted to change lives for our customers. We were giving access to financial services to people that had never had access to before. They were very much a cash-based economy, and so giving them access to digital services, to financial services is actually life-changing. We made a strong commitment very early on to also try and change the lives of the communities that we operate in. So we have a very strong charitable and working with the community ethos, which permeates all through the organization today.
That's great. Great to hear. If we could talk a little bit about the technologies that are really underpinning the innovation in the space where you guys operate. Obviously, a big topic on the floor has been tokenization of financial assets, real-world assets. But in the sphere of Money 2020, we're talking a lot about the financial asset side. So what do you see as the role of tokenization in enabling new payment experiences for customers that you serve in your space?
Yeah, I think tokenization is already critical, but I think increasingly so. Simplistically, from a card perspective, we have a very mature and I think market-leading tokenization product. And what does that mean? That means that we can take a virtual card and we can tokenize that and put it into Apple Pay, Google Pay, Samsung Pay, which really obviously facilitates contactless payments, NFC payments, etc. We also tokenize a number of the confidential, secure components, so card numbers, PAN details, etc., which I think it is critical. And for me, the role of tokenization not only enhances the use cases, but it also significantly increases security, fraud, and therefore the trust that customers have. And ultimately, as a financial product, that's the number one thing you need to gain from your customer, is that they can trust and you have credibility. And the greater trust you have, the more experimental you can get with the use cases that you can support. And so it's that fortuitous circle that we talked about earlier in terms of how do you create these great frictionless, seamless experiences for customers. Ultimately, technology like tokenization is what allows you to do that. So it's cool.
Yeah, related to that, obviously, is digital wallets, and tokenization is obviously closely underpinning the technology that makes those work. So you're seeing an emerging trend of issuers launching their own digital wallets in developing markets. Why would card issuers want to have their own versus simply working with a third party like Google or Apple Pay that you just mentioned? What's the real benefit of that?
I think there's a couple of things. I think specifically around Google Pay and Samsung Pay, they're, I guess, what you call open loop, and so issuers may want to create their own issuer pay product, and the advantage of that is that you continue to own the customer experience. So when we came back right at the start of the question around customers becoming having more affinity to brands and to experiences, really those brands they want to control the contact with the customer. So when we think about providing personalized services, tailored services, when we think about providing rewards and loyalties to those customers, if it's the issuer themselves that control that payment experience, then they can control those components. If you look at Apple, which is more of a closed loop, it's very different. At the moment, you can only, for contactless, you can only use Apple Pay in the wallet. And so Apple are actually owning that last mile customer experience. We've seen in Europe later on this year that's going to change, and Apple's actually going to have to open up, and I think that's going to lead to some really interesting, use cases and experiences. But for me, that's the main reason. It's the more you can have contact with the customer and own the customer experience, then the more you can build that relationship and ultimately drive a better outcome for the customer and ultimately more engagement for you as a brand or an issuer.
Yeah. Obviously, another part of grabbing engagement with so much innovation happening in the market, obviously getting new products to the market is obviously a competitive advantage if you do it the right way. How do you think about reducing that time to market when you're launching new payment products? Obviously, you have to, like I said, you have to put the right foot forward at the right time. What's the process and strategic thinking that goes behind releasing new products in a successful manner?
Yeah, I mean, that's if you got that right all the time, that would be the $1 million question, wasn't it? I mean, I think at Paymentology, what we look to do, we're a cloud-first, cloud-agnostic, API-first business, and we operate one single code base. So regardless of which market you operate on, it's a single deployment which allows you to go into multiple markets. And if we develop products and features for customers, we roll all of those enhancements out to all of our customer bases. So if you're only managing a single code base, I think that allows you to be much more agile and much quicker in terms of how you develop that code base. I think the other thing it's really important to do is to have the kind of fail fast mentality, get things to market quickly, maybe not perfect, get real customers to actually test and give you feedback. And then if it works, double down on it, and if it doesn't work, then kill it. And I think that's a really, important mindset that ourselves and fintechs are kind of bringing to the market, because that's the best way to continue to iterate quickly. And then I think is just you just have to be ultra kind of critical of yourself. And I think that what we're trying to do at Paymentology is to be very focused about what's our core proposition and what do we do well. And if it's outside of that scope, then let's use best of breed partners to deliver it. And so we're very focused on developing our core propositions. And I think that focus allows you to continue to iterate and innovate faster.
Smart, yeah. So in terms of the long-term view, obviously, a lot of changes happening right now, but in the future, in the near or far future, with digital wallets, with tokenization, do you think that the payment card as we know it or have known it is going to become a thing of the past? Is it dead?
I think maybe I'm slightly biased. I'm in the card industry. I think cards are here to stay, and actually, the more we embed them into customer experiences, the harder they are to displace. I think maybe the physical card as we know it may, in developed markets like the UK and Europe, become less visible because it's going to be embedded into these experiences. But if you take the global view and you look at some of the emerging markets that still have the vast majority of their economies in cash, the vast majority of their population are underbanked or unbanked. Their first step into, and then also in those economies, their access to smartphones is actually still quite limited. So phones exist, but not smartphones. A lot of our clients in Africa are still using USDC instead of text messages, etc.
Yeah.
So I think in those markets, physical cards is still the natural entry point. So I think it depends on which market you are, which level of maturity. Cards, my overall view is cards are 100% here to stay, and actually I think are going to increase the pace of innovation. But whether it's physical, virtual, tokenized, I think those use cases will continue to, diverge and expand.
Yeah. Well, Jeff, thanks. That was great. Got a little context on the business, and appreciate your views on innovation. And we look forward to seeing Paymentology's growth and evolution over time. Thanks for joining us today.
Thanks very much for having me.
Our pleasure.